Today on the CEO Barbecue, we're looking for copper, gold, tin, silver, and a bunch of other things in between, probably. And we're going to Spain together with Pan Global Resources. If you want a bullet point summary of this and all the other CEO barbecues in your inbox once a week, go to resourcetalks.com and subscribe to our free newsletter. Now, although the company you're about to hear from has not paid us for the production of this interview, you should still not treat this video as research. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. In any case, please only watch this if you absolutely know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is an extremely tough business where failure is the norm and should be the expectation. This is going to be a conversation that is general and impersonal in nature, and it is also going to contain forward-looking statements. I am not a licensed financial advisor, and my business sells content-producing services, which also makes me biased. Although this company has not paid for the production of this interview, it doesn't mean they won't become a client in the future. They might. So before continuing on, please talk to an independent investment advisor with a good long-term track record because your capital might be at risk. If you're not 100% sure you understand 100% of the disclaimers I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, Pan Global is listed as PGZ on the TSX Ventures Exchange, where the average 3-month volume is 240,000 shares. The stock's 52-week high is 18 cents and its 52-week low is 8 cents. With a market cap of just over 47 million Canadian dollars and 304 million shares outstanding, today this is a 15.5-cent stock with a 50 and a 200-day moving average at respectively 14.9 and 12.8 cents, which means the stock is now trading above both of them. In terms of ownership, insiders here are noted at 7%, institutions are at 30%, and high net worth individuals are at about 23%, leaving another roughly 40% in the hands of retail investors. As of July 31st, there were 60.6 million warrants, split about halfway in 30-cent warrants expiring in just over a year, so on October 31st, 2026. And then there's another batch at 16 cents that expires on May 6th next year as well. And those are, well, they're almost in the money today. There are some options, RSUs and DSUs to add to the stack here. There are 24.5 million of them, leaving the number of fully diluted shares at just under 390 million, meaning an increase of about 28% in shares outstanding could happen if all dilutive securities get exercised, which would then result in about a 22% ownership dilution if, and that is of course always a big if, but if all dilutive securities get exercised. And of course, none of this accounts for potential dilution down the road, which is not unlikely given that this is a pre-revenue company that operates in what is a very capital-intensive industry. Talking about capital, I'll now go through their latest financial statement, which shows me the numbers as of April 30, 2025. And at the time, the company had in total about 4.9 million Canadian dollars in current assets, mostly in the form of cash and cash equivalents to the tune of $4.4 million, with some receivables and prepaid expenses on top of that as well. In terms of liabilities, the current liabilities side of the balance sheet had just about $750,000 on it, specifically in the form of account payables and accrued liabilities. And there aren't any non-current liabilities that I could find, so that means no long-term debt. Moving on to the P&L for the 3 months that ended on April 30, the total amount spent on G&A shows up as $674,000, but that includes just over $204,000 of share-based compensation, which is of course a non-cash expense, leaving the actual out-of-pocket cost at a neat 470,000 Canadian dollars for the full quarter, or that's an average of about $156,000 a month, again, specifically for the quarter ending on April 30 this year. The biggest chunk of that expense were the consulting fees, director fees, and management fees combined, which represented about 37% of the spend, again, when you count them all up together. The biggest, or the second biggest chunk was investor relations, representing about 35% of that 470 grand spent. Exploration expenditures are detailed in Note 5, but the P&L here shows them at just over $1.4 million for the period. The vast majority of it, or almost 90% of that money, went into Escacena. That might be different in the current quarter that's currently going on because the company is drilling in a different project, which of course we'll talk about later in depth as well. And more specifically, over 75% of the money that went into exploration was drilling and technical services combined. So as always, there's two ratios left to calculate here. First one is the exploration to administration ratio, which sat at just over 3, meaning about 3 times as much money went toward exploration as it did toward administration, which in percentage terms says that 75% of the money PanGlobal spent went toward exploration. I also have the drilling to marketing ratio, which helps us see if this is an exploration or a marketing company. And that ratio here sat at almost 4, which means that, well, it's definitely not the latter. Of course, I would like to remind you that this covers just one quarter, so please be cautious because your capital is at risk. And please visit setterplus.ca to view the company's full financials and specifically pay attention to their full year financials once they become available, as they will be much more representative than just one quarter. Enough accounting for now, though, because we've got a brief overview of the company here. And ultimately, the story of PanGlobal is, again, one of copper and gold and a bunch of other things in between, a little bit of tin and silver as well. And it is specifically in Spain. And more specifically, their flagship project is called Escacena. This is a 100% owned land package in the Iberian Pyrite Belt, which is, of course, in the south of the country. And the focus within the land package is La Romana, which is, again, their main target. It's actually VMS Discovery that holds copper, tin, and silver. And in 2025, PanGlobal is currently, as we speak, drilling a 7,000-meter drill program focused on multiple targets with the idea of delivering an MRE by the end of this year. Again, we'll talk about that in depth later on. Permitting, metallurgy, financing, and everything else is, of course, also happening in the meantime, and that will be part of the conversation as well. Besides Escacena, PanGlobal has the Carmenes project. Now, that's in the north part of the country, so essentially the other end of the country, which covers a historic copper, nickel, cobalt, and gold district. And they're targeting both base and precious metals here, with early stage drilling at the Providencia Breccia having, currently going on the Carmenes project. So we'll talk about that as well. What success looks like, where it will actually happen, what are the challenges of operating in the EU, and much more, hopefully, later on in the conversation. But for this to actually become a conversation, I'll have to shut up already. And Tim, I'll give you the word here. But first of all, thank you so much for sitting down with me today.
Yeah, thanks, Zach. And thanks for the invitation to CEO Barbecue.
The pleasure's all mine. And since this is your first time on the CEO Barbecue, we'll have to go through the smell test first. But just before we even get into that, I'm interested in why you've chosen the EU to operate in. I mean, the EU is tightening measures for businesses left and right. You seem to be putting more and more money into it as that's happening. Why and why now?
Yeah, well, I guess some of its background, and if I go back to how I got involved with PanGlobal, and that's really where it started. I mean, PanGlobal, as its name implies, is not restricted globally, but it was doing some mainly lithium boron exploration in Serbia before I joined. So they were already sort of in this neck of the woods, if you like, to some extent. And then when I came on, they'd left the Serbia program and they were looking for something else. I had just left Rio Tinto, and I had familiarity with Spain. I led an exploration program there for Rio Tinto for a number of years, so I was very familiar with that part of the world. And there were some targets that were of interest to me that I felt were unfinished business from my time there. And when I left Rio Tinto, I went and started a private company, and I picked up some ground over one of these areas, and then by chance met with a couple of the directors of PanGlobal. And cut a long story short, I sold my private company to PanGlobal, and they asked if I would come in and run the company. So that's sort of how PanGlobal got into Spain. But I guess the other thing is, I think Europe is, and particularly Spain is, and southern Spain even more particularly, is a strong mining district. It's had thousands of years of mining history. It's still a very important industry in Andalusia, where we're operating. It's I think one of the best mining jurisdictions to be operating today, not just in Europe, but anywhere. And then you add to that the critical minerals initiatives and so on, and it's become increasingly important to Europe to improve its security of resources. So, hence copper is one of those sort of key ingredients. It's on the critical minerals list, and that's been our primary commodity of interest in Spain. So, that probably answers your question, I think.
Many more follow-ups that I will be back to here that I have specifically about operating in Spain, community permitting, and everything else in between, water, weather, wildlife, a bunch of things to talk about there. But we'll be back to that in the latter part of the conversation. I'm ready for the smell test now, though. And although you have kind of referenced part of it, I'll be starting off with the man running the company himself. Who are you, and why do you think you're the right man for the job?
Yeah. Okay. Well, I think I am the right man for the job. I've got why? Well, I guess I probably got nearly 40 years of experience in the mining industry. Over 40 years, actually. I began when I was 16. I finished high school and quite young, and skipped a grade and whatever. But that's another thing. And the first job I got was actually with a uranium exploration company called herein. Sort of German company. So, and they were doing uranium exploration in Central Australia, where I'm from. So, I either wanted to be a naturalist or a geologist, and of course, the first job I got was in the mining world, in uranium exploration. So that's where I got involved. I worked for 2 years, and then went off to university and got a degree in geology and geophysics, and then after that joined CRA, which became RPZ. I did some other work along the way with some juniors and so on. So I had experience in other parts of Australia up to then. 24 years with Rio Tinto. I was director of exploration, 18 years in exploration, 6 years in business development in London. But I guess during my time in exploration that's perhaps most relevant. As director of exploration, I had a global role, worked just about every continent on the planet, and fortunately made a number of discoveries along the way. Some fairly important ones. Received Rio Tinto's Discovery Award for the La Granja deposit. I discovered Constancia, Mina Justa, and a few other things. So, without going through the list, I've had a pretty strong exploration track record. But along the way, I was asked to come just after the discovery of the Las Cruces deposit in Spain, in the Iberian Pirate Belt. I was asked to come over and run the exploration program in Spain and Portugal. So I did that for about a bit over 3 years, really focused mainly on the Iberian Pirate Belt. We had the biggest land position at that time, and it became Rio Tinto's biggest mineral exploration program anywhere in the world at the time. So it was a pretty big deal. Obviously, Las Cruces was a very nice discovery, but then after that, there was a merge between, it was RTZ and CRA to become the Rio Tinto company. It sort of outgrew the Iberian Pirate Belt to some extent. But anyway, during my time there, we made a couple of other discoveries. My team found the Castillejito deposit that ended up being mined as part of the Matsa operation. It's already been mined, actually, finished now. We made another discovery, very big, massive sulfide called La Majada. That's still an exploration target. We never found the stockwork to that, but I remember drilling over 100 metres of thickness of massive sulfide within view of the old Rio Tinto mine. So, brand new grassroots massive sulfide discovery. So I had a background in that part of the world, and really when I went back there after a number of years, and as in my private capacity, it was really plug and play. I ended up picking up some of my old team, and away we went. And with Pan Global, we one of the first targets we tested. And the first drill holes in that target in the Iberian Pirate Belt were at La Romana, which became the discovery.
Mm-hmm.
Yeah.
I can appreciate exploration success, but that's unfortunately not always coupled with making money for shareholders, which is essentially your main job here. Is that also something you've done before? Meaning that process that you're telling me about, people who are with you and invested with you, did they make any money in the process?
Yeah. So, look, in terms of exposure to the junior world, I had worked to some extent in the junior world before I joined Pan Global. But I'd often sat on the other side of the table with Rio Tinto as well, so with juniors. So I had a lot of exposure in that side of things. In terms of raising money, Pan Global was the first junior that I became the CEO for. So in the time I've been with the company, we've probably raised $40 or $50 million. So, we've been quite successful, I think, in terms of raising
Yeah.
money. But, I came with a strong business development background as well. My last 6 years with Rio Tinto were as director and VP of business development in London. So, large M&A, large corporate transactions, corporate strategy, all of those sorts of things. So I think that equipped me very well, particularly with the negotiation side of things, the business side of things. So far, so good, I think.
Is this the only thing you're doing right now, or do you have any other executive or board positions that you're holding?
I have no other executive board positions. I'm a non-exec director of a couple of other companies. I guess the next most important is Mirasol. But my full-time job is very much just Pan Global.
Okay, because that would be my follow up: is how much of your time goes toward other activities? How much does it go toward Pan Global?
I'd say 99% is Pan Global.
Okay, you don't have a life outside of the company. You don't like having fun.
Yeah, I do. I get on my bike. I like cycling quite a bit. So busy the last 2 years to do as much as I'd like. But that's. I guess when you're in a tough market, you have less time for those joys in life. But you work harder, I think.
Yeah. Well, if you would call cycling a joy in life, then I can recognize myself in that as well. And especially that part of Spain where you are in the north has some really interesting stuff to go to. Board and advisors, Tim, here are noted as owning 7% of the company. How much of that is you personally?
Yeah, I have about 6.4 million shares. So continuously picking up shares.
So 2.5%.
Yeah, around 2.5%. That's right.
Okay. How did you? Because you said you vended your own company essentially into Pan Global. How did those 6.5 million shares that you have right now? How did that come to be? Was it that in combination with open market buying, or how did that happen?
Yeah, so I did receive some shares when I sold my company, but I've participated in just about every financing since then, and I've bought in the market. So,
okay. Yeah. Well, I can. What do you think is the average price that you've paid so far?
Do you know, I have never worked it out because I have no intention of selling it.
That's the right answer right there. Actually, it's because I wanted to ask, because I'm looking at the SEDI filings here, and I see that you bought some shares at 9 cents late last year. Is being in the open market and supporting sort of the share price something that you have the desire and ability to do going forward as well?
Yeah, and I have done that occasionally. So, every now and then I will buy some more in the open market. So, it just depends on my circumstances at the time. I exercised some warrants, some options earlier. Was it earlier this year and late last year as well? So, it depends on the circumstances.
What I'm getting at here, Tim, or where this line of questioning comes from is thinking, again, how important is this company to you in terms of timing? You said it's virtually all of your timing when you're not on two wheels. And how important is it to you financially as well? I mean, does this represent a large chunk of what you own right now, or
Yeah, look, it is I guess one of my most important investments. I'm fully invested in it, if you like. I'm not here for the salary. I'm here to hopefully turn this company into something that's worth a hell of a lot more than what it is today. So, that's my goal, and that'll make my investment of both time, but also my own hard-earned money, make it worthwhile. So that's the goal.
Yeah. Well, having mentioned some of the insiders, or the other insiders here that also own shares, let's maybe talk about them and the rest of the team as a whole. Who's really pointing the drill rigs here, and have they made discoveries in similar geological settings before?
Yeah, well, I guess first of all, I'm very hands-on. Obviously with a lot of exploration experience to pass on. But I do have I'm very fortunate. I have a very good exploration team. Starting from, I guess, the general manager. Well, a little bit unusual as a junior. We have 3 mining engineers on our team. So one of those, the general manager, Juan Garcia Mayor, he worked for Rio Tinto as well for about 18 years. He's a strong mining background. He's taken projects from pre-mining right through to operational and then closure. So a lot of open pit experience, etc. So he didn't have so much exploration experience, but he certainly got that now with us. And he was the right guy to bring into the team, given his background, his Spanish. He knew the operational world, very good reputation. He came strongly recommended. He's a very valuable member of our team. He is very well equipped to deal with the administration, etc. And look, very good hands to have as we move a project from early exploration into resource and beyond. So he's the ideal character for that. We have also Barbara Gomez, 3rd generation mining person. She's worked mainly as a consultant, so again, not so much on the exploration side, but she's worked on just every major mining operation in the Iberian Pirate Belt as a consultant. But now she's full-time with Pan Global. Again, she's what we call the general director of the company, so she's the legally responsible person. She does a lot of, masses of experience behind her. Again, very valuable member of the team. Alvaro Moreno, he's the VP of Exploration. Again, he's worked internationally. He's spent time in Mexico and Chile as well. He's Spanish. He's been involved with discoveries, along the way. In Chile, I can't name them all, but he's worked mainly as a consultant rather than running a company as such. But Alvaro's the longest serving member of my team in Spain. He's been with me with Pan Global for the whole journey. So he was there as part of the discovery of La Romana and some of the other successes we've had along the way. So again, he's a very experienced geologist. Does have a mining engineering degree as well, but his forte is in mineral exploration. But handy to have that other skill set. And as I say, international experience. He knows what he's doing. Really, really good member. And then I go down to the senior geologists. Some of those have international experience as well. So I feel very fortunate that we've got such a strong team on the ground in Spain.
I thought mining engineers and geologists don't like each other very much.
Yeah, well, look, I think it really gives us an advantage in our situation. We can quickly assess something, work it well, start to sort of see what might this mean economically. What do we have to do to take this forward to bring it to resource, etc. So I think and looking forward, I think if we ever got into a takeover situation, I think part of the value that the company brings is the team.
Yeah, that definitely is part of the proposition here, which is why I wanted to go over it. Do any of them, Tim, or maybe you personally, given that you've vended your own company into Pan Global, do any of you guys own, and personally, own a royalty on any of the projects?
No.
Okay. Do any of the insiders, board executives, any of the people you told me about, do any of them provide services to the company outside of your regular sort of management activities? I'm talking about drilling or camp or anything else.
Right.
Well, still on the same topic and still within smell test, I want to talk about incentives and specifically this year's incentives. So 2025, given that you're planning that MRE, hopefully by the end of this year, which we'll talk about, of course, later on. But how do you measure success, and how do you compensate your people based on that success? As in, what are the KPIs? Are you going to reward them based on a new discovery in the north? Are you going to reward them based on a certain size of an MRE in the south? How do you look at that?
Yeah. So yes, discovery success does get rewarded as part of the KPIs. You try and reward people with that sort of success. The other thing is, obviously safety is a measure. Safety performance. Not only that, environmental actions, etc. That is also important to measure, because that gives you your social license to operate. Obviously, if you do that stuff well, but also operating on budget is another thing we measure. So all of those, the normal things we use as KPIs, but people will be rewarded for exploration success. Mm-hmm. Not only exploration success, but we also, particularly in my case, the company performance.
Well, is any of the executive compensation specifically or board tied to market cap or share price or anything related to the share price, the stock?
We do peer comparisons. So we have a compensation committee that looks at and we constantly review the peers that we compare ourselves against, but we anywhere from 10 to 20 different, like companies, and we compare our performance over time against those. And, if we're outperforming our peers, then that gets recognised, and that's part of the compensation discussion as well.
That's actually an interesting point, because come to think of it, there aren't all that many, if any, direct competitors or peers to Pan Global. Who do you compare yourself to? Like, who would you consider a peer?
Yeah, well, I guess you're right. You have to sometimes sort of look around. Where are our direct peers? So sometimes it's not all companies just looking for volcanogenic massive sulfides, for example. But it might be New World Copper. It might be Emerita. We often get compared to and asked about. That's just a couple of them. But
yeah. Well, this actually might be a good segue into talking specifically about the business plan here, Tim, because and if we look at the tea leaves here, what do you see in Pan Global's future essentially? Is it a sale of Escacena and then further advancement up north, or would you like to be putting Escacena into production using cash flow for exploitation? I mean, there's many ways you could go from here on out. So where do you want to go?
Yeah, look, first and foremost, we're an exploration company at this point. So look, with the team we have, we can take a project, quite a long way. We could take something into production, depending on the scale of it. So it does give us some options. But look, if we have the success we hope we will get in the Iberian Pirate Belt, for example, then I think the reality is either we'll have a partner or someone else will become a takeover target, given our location and who our neighbours are. So, but hence, if they buy the team, I think the team is part of the asset that they'd be acquiring. So, so look, I don't see us necessarily developing, if we have the ultimate success of, say, something around the sort of 50, 100 million tonne size target, that we'd be the operator. I think more than likely it'd be someone else would be operating that. But, we do have the capacity to take something much further along the track than perhaps your average junior, if that's the way we have to go. So, in terms of the other exploration, the project up in the north, obviously exploration success elsewhere gives us other opportunities as well. Could we spin off a company, for example? Do we partner up or sell projects if they don't meet our criteria? But it's part of trying to create that value, create those other opportunities for the company going forward. But I don't see us being a big producer, but we could do some. We could certainly take something further along the path.
A couple of threads there worth pulling, but just before that, given the mining history of Spain, the Iberian Belt, and also even in the north, I mean, there's been a lot of mining activity there too around where you are. If the ore body is there the way you hope it is in size and grade, why isn't it being mined today? Why hasn't anyone discovered it and put it into production?
Yeah, so it's a very good question. So there was, I guess, there has been a sort of a belief that just about everything in the Iberian Pirate Belt had been discovered. at least anything that in the upper sort of 300 or 400 meters. So anything, so that's been a sort of, I guess, a folklore for a number of years in the belt. So one of the things that was particularly attractive about the area we selected in the Iberian Pirate Belt, and I'm just focusing on that area, that's our flagship area at the moment, but we can talk about the project in the north later. But when I was running Rio Tinto's exploration in Spain and Portugal for Rio Tinto, this was an area that we didn't have. And Las Cruces, I mentioned I came in after the discovery of Las Cruces. Now, Las Cruces was a very important discovery, blind discovery, meaning it was buried underneath 150 metres of post-mineral cover. So this was one of the early exploration successes, going undercover off the extensions of the Iberian Pirate Belt. So where the younger marine sediments had buried the prospective geology. So so the area that we have called our Escacena project has a large proportion of this post-mineral cover, but it's much thinner than the cover sitting over Las Cruces. But but still very prospective, because most of the known big mines in the area of Iberian Pirate Belt where there were rocks sticking out of the ground, the Romans had found something. It was the Romans were very good explorers, but even before that, so most things had been found by ancient explorers previously, but they didn't have the skill set. They didn't have seismics or electrical geophysics, etc., to explore beneath cover. So those covered extensions of the Iberian Pirate Belt remain, I guess, virgin to some extent until I guess Rio Tinto found Las Cruces off on the eastern extension, and then there's this area in between Las Cruces and where the rocks stick out of the ground, and that's where our Escacena project is located. So, as I say, this was an area that had, when I was running Rio Tinto's exploration in this area, we didn't have, but we would have loved to have had it. At the time, it was held by Boliden, and Boliden's focus was on expanding the Asno-Hoya mine, which is just our neighbour, within 6 kilometres of our Laramana discovery, now owned by Grupo Mexico. So their focus was on Asno-Hoya, expanding that, and then they made another discovery called Los Frailes, just a kilometre or so to the east of that, another big, massive sulphide deposit. And they were just about to start exploring this sort of bigger area that we now call Escacena when they had a tailings dam failure. So that put an end to the exploration. So essentially the only other exploration in this area before that was by Exxon, who was a big oil company, as many back in the 80s. Some of the other oil companies were also dabbling in mineral exploration. They did a little bit of drilling, did some very good sort of gravity geophysics and so on in the area, but they moved on. But that's the only other exploration that had been done in this area, and I was aware of that. So I knew that this area essentially had remained unexplored since the early 80s when Exxon were there. And because of Boliden's tailings dam issue, the area remained unexplored until we came along. So this was prime terrain, prime for exploration success. And we've got a lot of targets there. And as I say, the first target we tested, we were very lucky. First drill holes in that target were the discovery holes at Laramana. So yeah.
Well, you just said 50 to 100 million tons. That would be, 100 million tons. I'm just wondering where that number comes from, because that would be in that rare category of VMSs, right? Like your Kidd Creek, Noranda type of VMSs. It's so large. They're typically 20, 30, maybe 40 at times, but 100 would be an outlier, right? So where's that number coming from?
Yeah. So look, the average size for a VMS deposit globally is probably around 10 million tonnes. So the Iberian Pirate Belt is the preeminent VMS district in the world. It has more of these, what they call a supergiant, plus 100 million tonne VMS deposits than any other equivalent VMS district anywhere in the world. So it is unique and stands alone in that that sphere. And it has what, 7 or maybe 9 deposits with over 100 million tonnes. Including some phenomenal ore bodies like Neves Corvo, well over 200 million tonnes. So they all occur as clusters of deposits. So we're in let's say the land of giants when it comes to VMS deposits. So although we haven't put out our resource yet, we'll see where the numbers land. Depends on cutoffs, etc. But Laramana on its own is probably anywhere from 20 to 30 million tonnes, maybe more depending on the cutoff. So that's already a pretty decent size. Now, when you look at all of the big mines in the Iberian Pirate Belt, they're not single ore bodies. They're clusters of deposits. Neves Corvo is 6 or 7 different ore bodies. Sandfire, their Aguas Tenidas deposits, 5 different ore bodies. Sotion Magoyas has several deposits, etc. So all of the big mines, all of these ones that get them to that 100 million tonne scale, tend to be clusters of deposits feeding one common plant. So, we've got one with Laramana. It's a pretty decent size in globally, but also within the context of the Iberian Pirate Belt. So we set ourselves, we recognise just one ore body of that scale, given our location, right next door to a new development at Asnopoya, which Group of Mexico are doing at the moment. We're not that far from Las Cruces as well. The numbers probably make more sense to truck or conveyor belt the ore to one of those nearby operations. But if we get to sort of 50 million tonnes, which probably means having at least two different ore bodies, then the numbers start to look more attractive for a standalone deposit. If we can get to 100 million tonnes, then that puts us on par with some of the other big producers in the district. So that's the sort of thinking behind our approach to the exploration and really driving our exploration program this year, because we're really focused on testing new targets, we recognise that if we make another new discovery on one of these many other targets we have in the area, that gives that opportunity to move close to that 50 and 100 million tonne objective. So.
What if it comes under that 50 though? What's the smallest size of deposit that you think would be worth it for both the context of where you are in the world, but also for you as a company?
Well, I think this is one of the big advantages we have is our location. I mean, the infrastructure is second to none. It is phenomenal. But Laramana's within 6 kilometres of Group of Mexico's new underground mine development. So we're really very close to that. I mean, it is conveyor belt distance. Las Cruces is 15 kilometres or so to the east as well. It's operational. It's currently undergoing a sale process. So we'll see what the outcome of that is. But it is operational. It's not mining at the moment. It is.
And so that would be your preference as well, would it? I mean, selling...
So it means you're not constrained in terms of so much in size. I think with what we have now would be easily feed one of those other mines. So I think that gives us and investors some security. We're sort of backstop. What we've got, we've already created value with that discovery. It's still open. It's still growing. How do we take it to that next level? And that's make another discovery, or 2 or 3. We've got an early, discovery indicator at another target called Cañada Honda to the north, about 3 kilometres north of Laramana. It's a very big target. It's got similar dimensions of scale in terms of exploration potential as Sotion Magoyas or Aguas Tenidas, these couple of other 100 million tonne plus deposits or mines. They're in operation at the moment. We've just drilled one end of it, the shallow end of that Cañada Honda target. Drilled 16 holes. We're getting all grades and thicknesses, potentially in those few holes. Some of that could probably fall into resource. We'll see how the mineral resource assessment goes. But that's the reason we're not drilling that at the moment, is because it's a deeper target. It sort of plunges off to the west. We could spend all our money just testing that one target, because we're talking 500 to 800-metre drill holes. You quickly burn through your money drilling those deeper holes. But then, we've got the indications of another one. It is a discovery. It is a new discovery, but we haven't tested the full extent of that at the moment. So we're really turning our money into shallower targets at the moment. That gives us better bang for our buck, if you like. We can test more things with the money we've got.
The name of that other target, was it a conglomeration of Canada and a Pinata?
No, it's Cañada with an Enya. So, yeah.
How did that come to be?
Well, there's a farm there called Cañada Honda.
Okay. I thought it had something to do with Canada. And it also sounded funnier in my head when I was going over it just before I asked it. But how far up the Lassonde how far up the Lassonde curve do you think you have to take it, though, Tim, in order for it to be an asset that's interesting to a group of Mexico or whoever else might be? I'm not suggesting specifically them, but whoever else might be coming in to help you build it or either take it off your hands.
Well, obviously we don't know what we're not in the room with the group of Mexico to see what their thinking is. But why would they want something like that we've got? Well, I think there's a number of reasons. Group of Mexico is primarily a copper company, copper mining company. Asnohoya, as it stands today, would not be a big copper mine in the context for them. They've got lead and zinc. It's more of a lead zinc mine than it is copper, but they have some copper and probably producing maybe 10 to 14,000 tonnes of copper per annum, something like that, which is not big for them. So you're having another nearby feed to their plant from something like Laramana, you would think would naturally be of interest because it gives them more scale. But there's the other thing is we think the grade of Laramana is probably better than what they'll be mining in an underground scenario. So whereas we're looking at potentially open pit, so much lower cost, and then you add to that the metallurgy. And metallurgy is so important, as I'm sure you know. We have very advanced metallurgical testing already completed on Laramana. It's at certainly PEA, certainly PFS level. We don't need to do any more metallurgical test work unless some of the extensions that we're drilling at the moment start to look radically different. But the metallurgy is showing, and using very conservative head grades, that it is the best metallurgy compared to any of the other existing mining operations or advanced projects in the Iberian Pirate Belt. It's clean. It has no deleterious metals. The concentrate grades and recoveries are simply much better than any of the other operations. Why is that? Because the style of VMS mineralisation, it's more a replacement style as opposed to what they call exhalative, which tends to be the case with all the other big mines with these massive pyrite bodies, which pyrite it tends to dilute the grade of your concentrate, particularly for copper. So, and it also brings its finer grain typically because it's formed on a C4 or there or close to it, and comes with all the deleterious metals, etc. So having a replacement style, so still part of the VMS spectrum, but just formed a bit lower a bit deeper below the sea floor. It's meant that there's lower in pyrite, coarser grained, and doesn't have all the deleterious metals. So that's given us this sort of very fortunate, excellent metallurgy. Getting close to 30% concentrate grades for copper, recovery sort of 88 to 90% recovery. So this is, way off, much better than any of the other operating mines in the area. So there's a very good reason they would want that. If you're dealing with penalties, if you can blend with something which is clean, that means you reduce your penalty content. We have an advantage as well with clean concentrate that ore could potentially be treated at the Huelva smelter, which is just 70 kilometres away from us. Unlike some of the other mines where the ore is too dirty and can't be treated there and has to be put on a ship and sent off to China or somewhere else. So, again, it's a big plus.
Yeah, metallurgy is you're kind of stealing my thunder there a little bit, Tim, because that's typically something that I use to ask about when I want to make myself look smarter than I really am. But it's good that we're already getting that out of the way. To go back to critical size here, though, how far away are you from that? I mean, both in terms of time, but I suppose more importantly, from my perspective, drilling. Like, how much more drilling will that take?
I think we're still very, very low on the Lassonde Curve. I mean,
Yeah.
we're still, as an exploration company, we're still trying to find, ore body number 2, number 3, number 4 to give us that 50 to 100 million ton or 100 million ton plus scale. So I think we can do that. We have the targets to do that. So we're right down the bottom. The goal is, as you know, is to put out the maiden mineral resource estimate for Laramana this year. We're on track to do that. We're in the selection process now of who's going to be actually doing that work. So,
Yeah. So why I'm asking is because you've actually already put some dates to it, like 2029. I think I've heard, I've heard you talk about that before. Where is that coming from? I mean,
yeah.
again, yeah. Talk to me more about that.
Yeah, so look, if we were to put out the mineral resource estimate by the end of the year, you could, in theory, move the project into a mining license application. A mining license now, because of the critical minerals initiatives in Spain, they're offering to grant a mining license. I think it's within 28 months or thereabouts. So that's pretty quick. And then allow for another year or two for the development. That gives us the 2029 time thereabouts. Now, that granting a mining license inside that time has already been tested. The Massa de Valverde deposit that's owned by Atalaya, that got its mining license, I think, certainly well under 2 years. Might have been not much more than 1 year, so it came pretty quick. Mm-hmm. Magdalena deposit, which is now a mine operated by Sandfire, that was a grassroots discovery in 2012. That was put into production in 2015. That's another 100 million ton massive sulfide deposit. So you can get these permitted and into production pretty quickly in Spain. This is an established mining area. Lots of experienced mining personnel, international equipment is available, international laboratories, etc. And infrastructure.
I do have permitting on my list here as well, but when I asked you about the timeline here, I was mostly thinking about money in that case, as in how much money is it going to take it to get there, and then more importantly, I suppose, how do you think about financing the company strategically going forward? I mean, you have options, royalty, JV, straight equity, other things in between.
Yeah, at the moment, the focus is trying to grow the portfolio, get the scale up to that 50 or 100 million ton. I think that's where you start to really create value. That's where we can start to get multiples on the share price. So that's the goal, more than, let's say, trying to put something into production at this stage, because we think there's much more value to be created by making additional discoveries, particularly in and around our Laramana discovery. So,
can you get there on the treasury that you have right now?
No, I mean, just like any exploration company, we continue to spend money on exploration. You need to raise money, refinance to keep that exploration program going.
Is that going to come before or after the MRE late this year?
We'll have to see. I suspect it'd be before that, but we'll see how quickly we get it done. At the moment we're under budget. We're going pretty well with our money, so we expect we'll have 3 rigs turning within the next week or two. So. Well,
because you have those 30 million warrants at 16 cents expiring next May.
Conscious of that as well. Yeah, that's right.
Yeah.
But, we can't. I guess the 30-cent ones we're not in the money at the moment, so I can't see those. But the other ones are getting in fact, we've been over the 16 cent. We've been up to 18 cents, as you mentioned in your introduction. So that's starting to look pretty likely that we can get us over that mark. Certainly with a bit more exploration success. I don't think it's going to take much So yes, that would bring a good amount of money. If we certainly got the 30-cent ones exercised, that'll bring another, I think, 9 million or something like that if all the options were exercised. Not as much for the last financing, but yeah. Look, that they if those are exercised, that's warrants doing their job really.
Well, this is and this is obviously forward looking, and it's also maybe a bit hopeful here. But is there a world in which you don't raise capital in between now and the first? So those first warrants, they're May of next year. They're at 16 cents. The other ones are in October of next year at 30 cents. But so you have time in between. And so one of it is going to bring like $4 million or something like that, or even a little bit more. And then the other one would bring about $9 million. Is there a world in which you live off of your warrants while you're working on that new discovery?
Yes, I think that is a possibility. Obviously, we like to drill. We like to drill a lot. So that's it. Just depends on where we're at. We don't like to sit on our hands waiting for warrants to be exercised or something like that. We want to keep drill rigs turning as much as we can.
Well, you are drilling right now in. I think you're drilling both in the north and in the south. Let's maybe talk about the south here. What's going on there? How much have you drilled? How's everything going?
Yeah, so we've drilled about 22 holes in the south this year, thereabouts. So that's a mixture of testing some new targets and testing and stepping out, expanding Laramana. So we put out some results not so long ago showing that the Laramana's continuing to grow. It's still open. The northwestern, particularly in the northwestern direction, we had 8 meters at 1.5% copper, which in the context of the Iberian Pirate Belt for VMS deposits, that's a pretty decent intersection given it's pretty shallow. And then you had 18 meters at 1.2, 1.3% copper as well. So it's very much open at reasonably shallow depths heading off to the northwest. Looks to be plunging a little bit to the in that direction at the moment. It's also open in other areas. So the next phase of drilling, and we're going to add another drill rig, if not this week, next week, to start stepping out in a number of directions, following up the northwestern extension, adding to the strike length, but also trying to expand it in a couple of areas where we can see potential to increase the grade and add tonnes down dip as well in a number of areas. So that's Laramana. We drilled 3 holes at a target called Pantoja, which is off to the west of Laramana. Seems to be at a lower stratigraphic level to Laramana, but very similar style mineralisation. We hit not very thick intervals, sort of 1 to 4 meters thickness, but very nice grades, sort of 1.4, 1.8% copper, etc. We had one intersection, I think it was over 5% copper, again with a bit of tin like we see at Laramana. So very early days on that, but a very interesting result given the scale of the targets, about sort of 500 meters east-west. If we've chased it from near surface to about 600 meters depth based on the geophysics. We don't think we've tested the best of the geophysics target at this point, but it does open up another interesting possibility, because at that stratigraphic level where we've intersected this mineralisation, that is below the depth of just about every drill hole we've done at Laramana. So is there another layer beneath Laramana that we haven't tested yet? So that's a pretty interesting exploration opportunity. So we're just going through the revision of all the information at the moment to look at putting another couple of holes in at Pantoja, and to see if we can get some fatter intersections and improve upon the results we've had so far. So that was a good result. We put a couple of scout holes into a couple of other targets. Haven't hit anything sort of too significant. Often, just about every time we go out and drill, we hit some mineralisation or alteration or something. So that tells us our processes are working. But we're drilling another target called Bravo, which is to the east of Laramana. It's a very prominent gravity anomaly. We've drilled 5 of the planned 8 holes at the moment. we're hitting some alteration. We're hitting some bits of mineralisation. We haven't hit the ore body yet, but we've still got another 3 holes to go. It's a very big target. Sometimes success doesn't come in your first holes. You've got to be persistent. But we're taking the information from every drill hole we put in. We put it back into the geophysics models and put the geology in as well from those drill holes, and then we reevaluate and say, right, have we got the next hole in the right spot, or do we need to adjust it? So that's the process we're doing with that. We're drilling another one. We've just drilled a couple of holes and another hole at a target called Ornitos. Just waiting for the results on that. We're drilling another one called Plomios as well. The drill rig's on a target called Plomios right at this moment. But yeah, bottom line is we should have 2 rigs drilling in Escacena, probably, if not this week, by next week sometime.
Sounds like you might go over the 7,000 meters then in that case.
Yeah, at this stage, because we're under budget, I can see us being able to extend that drilling beyond the 7,000 meter. I'd want to sort of give a number at the moment, but yeah.
What's a meter of drilling costing you?
About 180 thereabouts, all up. So yeah, something like that. So it's
Euro, that is.
No, that's about Canadian dollars. No, yeah, 180 euros. Sorry. That's everything in.
Yeah, all in. Okay. When do you want to have some assay? Oh yeah, go ahead.
It's water, site preparation, or everything thrown in.
Camp and everything, assays and everything in between. Yeah.
Well, there's no camps. Everyone sleeps in their own bed every night. So yeah, this is we're only 30 minutes drive outside of the city.
That's right. Yeah. Well, when do you want to have assays though, Tim? I mean, are you going to be bundling it? Well, I suppose you're going to be bundling it, but how and when do you want to start releasing?
Batch it, and we typically put results out in batches. So yeah, for Bravo, we'll wait until we finish the program and put it. Yeah, then we can put it all into context and release those results. On top of, we've already put the results out for those 3 holes. That was the planned program. We've got some success. We put those numbers out. So we'll, as we get results from those batches of samples, we'll release them.
So when do you think that is? I mean, any indication of time?
Yeah, I expect we'll have the next batch will be sometime in September. Typically, with the drilling at La Romana, the drilling goes pretty quickly. We've got another 5 holes planned in the step-out program. So it's going to take, it takes about a week per drill hole. So 5 weeks, then you add at least another 3 or 4 weeks on top of that.
What is it? What are kind of the guidelines of what you're hoping to see in those holes, though? I mean, in terms of grade and size.
Yeah, so we've done an exercise, which is essentially we look at probability of 2 things: one, grade and thickness. So we've ranked each hole on the potential to both, which has the potential for the highest grade and thickness combination. So that sort of governs the step out program. So which hole is going to have the most impact on a potential mineral resource in terms of grade and thickness? So that's the exercise we've gone through. So as I say, this next 5 holes, we're looking off to the northwest to try and extend where the mineralisation is clearly open at shallow depth. But we've also recognised there seem to be some sort of shoots of mineralisation more in the centre of the deposit that are still open as well. We could extend the higher grade zones at good and hopefully at better than average thickness as well. So it's a very interesting approach to the prioritisation that we're doing. I think given how predictable the deposit is, you would think it's a good approach to it. And look, most of La Romana has only been drilled to less than 200 metres, so it's still a very shallow tested target. There's only one area off to the northeast where we've chased it down to about 400 metres depth.
Yeah, so that's another point that I wanted to talk about how does that grade that you're telling me about so far, how does that hold up with depth? I mean, is there enough continuity here for tonnage, or is your expectation that there is enough continuity here for tonnage beyond that 200 meters?
Yeah, it is. It is very continuous over the entire strike length. It's not folded. It's not faulted. It's just a 35 to 40 degree tabular sheet of mineralization, just varies in thickness and grade. That's it. So, it's, again, at that 35 to 40 degrees, that is ideal for an open pit. It comes to surface and it's very predictable. It's almost become boring. I think that, you hit the mineralization we expect to hit it every time. So, it's in the northeast. What we're seeing, that where we've got some of the deepest drill holes, we had actually some of the highest grades. We had several meters running, 15%, 17% copper, massive chunk of pyrite. That was spectacular looking mineralization, but that's some of the deepest drill holes.
What are the cutoff grade assumptions that you're taking for the maiden resource? Is that something you know already?
No, we'll leave that to the consultants to determine that. But look, a good guide, I think, is and something we look at and compare with potential mining costs, etc., is Atalaya's Cerro Colorado open pit mining operation. So their reserve grades are about 0.39% copper. Their cutoff grade is 0.15% copper. It's an open pit. So yes, they have all the infrastructure in place, etc. But mining operational costs are going to be reasonably similar. Truck costs are going to be similar, etc. So they're using that 0.15% copper cutoff. Their concentrate grades and recoveries are not as good as what we believe we can get using similar head grades to what they're mining. So, I think that gives us a pretty good benchmark. I think internally we were looking at sort of 0.2, even 0.25, but I think we can probably push that below the 0.2, closer to the 0.15 cutoff that Atalaya use. And if we can do that, that would certainly give us more tonnes as well. Of course, we have tin. The tin is a very important co-product in the case of Laramana.
What price is that a byproduct at versus it being more expensive to recover than what it brings in?
Well, what, the tin?
Yeah, tin.
Yeah. So at this stage we haven't used tin as a tin cutoff per se as the economic cutoff for the deposit, because it's mainly copper. But I guess the overall grade would be something like 0.03 to 0.05% tin, something like that. But we certainly have some areas where it's around, gets up to 1% or 1% tin as well. So there's certainly some areas where tin is almost worth more than the copper. Some high, again, part of the system seems to be zoned. You have sort of like Neves Corvo, you have a tin-rich core going out into more copper-rich. We seem to see similar type of zonation at Laramana. But overall, we're talking somewhere between 15 and 20% of the overall value of the deposit is in the tin. So it's an important. It's not just a byproduct. It's a co-product at those sort of contribution.
So that would require an additional circuit then in that case.
Yes. So again, we exceeded our expectations. It's excellent metallurgy. We're able to produce concentrate grades of over 60% and recoveries of over 60%. Now for tin, that is excellent. Again, low in deleterious materials. So clean concentrate puts us into that premium end of the range for tin concentrates using very simple gravity separation. So often when you talk about tin circuits, put it in simple terms, simple or complex circuits. So when I talk about simple in this case, it's just gravity. And we're talking sort of 2 or 3, maybe 4 stages of gravity separation. Mm-hmm. We don't need magnetic separation. We don't need we don't need flotation or any other combination to get to those very good concentrate grades and recoveries that I mentioned. So essentially what you're looking at, because the tin is in the gangue, not in the locked up in the sulfides. And it's 100% cassiterite. There's no stannite or any other sort of tin minerals that are metallurgically impossible. So, cassiterite's obviously the main tin mineral concentrate. So, you're looking at an early crush and gravity separation. So you produce a sulfide material that goes to your flotation plant, and that contains all your sulfides, contains your copper, and the tails from that process contains your tin. So, and tin, because it's much heavier, cassiterite as an SG of 7.2, it lends itself very well to gravity separation. So, in that very first thing, crush, separate, your sulfide-rich material goes into your flotation circuit. You reject your tails, then goes through a gravity circuit. Then you do some recycling, etc., to improve the grades.
I think it'd be good to book a separate conversation and maybe do a little bit of a geo deep dive and kind of your expectations for what this is, because it is, again, tin is a co-product, not a byproduct. That's also not very typical for VMSs. So that'll be interesting to talk through as well. Just to a point you made earlier, though, Tim.
It's not unique to. It's not so unusual. Like Kidd Creek and Nevis Corvo, two phenomenal copper-rich VMS deposits that had tin as co-products. So tin at Nevis Corvo. Nevis Corvo was Europe's biggest tin producer, one of the biggest tin producers in the world when it was producing the tin. It's not producing tin today.
Yeah.
But it was a very important tin producer, and Kidd Creek similarly. So.
Yeah, well, those are two outliers. I believe Kidd Creek is one of the bigger ones out there. It's certainly over 100 million tons, if I remember correctly. Yeah. You're certainly in the process of selecting a counterparty for that NI 43-101 MRE that you want to publish later this year, if I understand correctly. How's that process going? Is it looking like you're going to have it done on time before the end of the year?
Yeah, that's just that we remain on track for that. I said, because it is a pretty simple deposit. It's not a complex one, as I mentioned. And we've done a lot of the work already. We've got good cost information, etc. We've already begun things like sizing and costing studies, etc. All of that work's been advanced. So we think it'll be a pretty straightforward process. But we'll at this stage we're still on track to have the mineral resource out this year. In terms of the selection process, we've received quotes already. So it's just a case of going through and making the final selection. I think we're waiting for one or two more to check, and then it's a discussion to make sure the parameters are set correctly, and away we go.
What would the CAPEX be on something like this, though? I mean, what's the range that it could be? I suppose I understand you cannot tell me what the final number will be, but rough lines, what are you thinking?
Yeah, it depends if it's a simple, open pit for just Laramana, it could be 75 million, something like that.
Mm-hmm. So it's not at all as high as I might have expected it.
Well, it's right. It comes to surface, and it's very simple. It's flat topography, etc. So, if you're trucking or conveyor belting the mineralisation to one of the nearby mines, you're not building a tailings facility, you're not building a plant or anything like that. You won't even come in under that.
Yeah.
That's a pretty low capital intensity project if we're looking at under those scenarios.
I think we talked about the main things here. I mean, grade continuity. You mentioned metallurgy, strip, because you said it's a 45 angle there, 45-degree angle there. What's the biggest risk between now and then in that case?
Well, I get asked that, and I ask myself, I say, what are the red flags here? What are the things? Well, what are the things here that could really sort of upset things? I think, previously you might have said permitting or something like that. Could that delay things if you were going to permit? But I really don't see that in this case being such an issue, given copper being on the critical minerals list. Assuming our deposit will get on that. Yes, the status, get the right status to under the critical minerals initiative. We've had the mines come to us and say, when are we going to submit our mining license? I mean, in my career, you don't get that very often, where the mines department is actually coming to you, asking you to submit your mining license.
Well,
I see it happen. In terms, look, other NGOs, well, yeah, Europe, you have that, but again, this is a mining friendly area. That's not such a risk in this location. Infrastructure is excellent. Really, there's not a lot. I think it's exploration risk, in terms of going forward. Can we get the 50 to 100 million tonne target? That's probably the main one. I guess the other one is obviously funding. We want to make sure that we've got funding, but I think there's always solutions to that, whether you bring in a partner, a strategic partner, or a strategic investor at some point. I think we can deal with that depending on how far along we get with the project.
Well, you mentioned Serbia earlier, and what I've seen happening in multiple cases, not only there, is that, the government wants it. The EU, even though Serbia is not in the EU is pushing Rio Tinto to go through. Locals are saying, no, not now. We don't want that. We don't want that mining here. So what's the case with the locals for you? What's the thing you get asked about the most when you talk about them to them?
Well, we get asked, well, when are we going to submit a mining license? That's one thing. More as a friendly, encouragement for us, rather than they're saying, well, we must do it by now, otherwise we're going to, our mineral rights are at risk. But mineral rights security in Spain is very good. There's no issues there. So no, and they understand. The administration understands that we're a good explorer. We drill a lot. We're doing good work. We're seen as one of the best in case examples of how a junior operates in Spain. So we have an excellent reputation in that part of the world. So I don't see that as being a risk going forward.
This has been a very active area, though. So historically, as we mentioned, so is there any historical disputes or anything else on the package that might come up later on?
Yeah, well, look, just to the east of us, but obviously there was the Group of Mexico's project, which there was been, I guess, no secrets. There's been some legal cases going on, and look, that took, I think, from when Group of Mexico began their feasibility studies, etc. I think 7 years or something like that, getting their final authorisation to commence mining, which they received about 2 months ago or something like that, 2 or 3 months ago. So, that probably answers your question, I think.
What about water availability and potential water disputes?
Yeah, so water's been, so traditionally you need to go through 2 ministries, and that's one of the things with the Critical Minerals Initiative, to try to have a one-stop shop to try and move these things forward, so you don't have to deal with 2. But historically, you would tend to have to go through 2 different ministries. One is the environmental, the other one is the mining side of things. So the environmental side of it is the thing that takes the most time, and more often than not, it's actually the water management side of things that is the longest term item. So. But look, right next door to us is, say, Group of Mexico have just received their authorisation for a new mine. It'll be a new underground mine. So, we're not paving the way. This is ground already tried and tested right next door to us.
I'm sorry, I misspoke. I said water. I meant to say water. I'll try my best next time to pronounce it like a true Aussie. What about power availability? I mean, I know there's power in the region, but mining is going to request more power than just that. So what's power availability?
Yeah, that's it's a good question. Obviously, there are other new mine developments going on in the area. I mentioned Masa de Valverde, and that's another new mine. Group of Mexico's new project, that's another new one, etc. This is going to put more demand on the system. There are some other mine developments going on as well in and around Atalaya's operation. So, in fact, we're a member of a group called Aminair, and under that we set up there was a committee group set up to look at future electricity requirements. We actually were part of that even though we're at very early stage and we're sitting with the bigger operators in the room. But we've actually paid something for one block, let's say, of any new future electricity development. So, yeah, it's we're in that discussion with the government, look at future requirements, and we already have our foot in the door in terms of getting access to any new power development.
How's topography and overall accessibility of La Romana specifically and the rest of the package?
Yeah, so again, it's fortunate that we're pretty flat topography. You may have seen some of the photographs we put in our corporate presentation. It's at best just gently undulating. So there's no sort of national parks or lakes or rivers or anything like that in the way. So I think there's one small gully we have to be aware of. There's might be some ground birds or something like that, but essentially nothing that's any different to what was present at Las Cruces or at Group of Mexico's new.
And that's so focusing on your project in the south. Let's maybe touch upon Carmenes as well. You announced some results from there for your first ever drill program. As far as I understand it, there's still some drilling going on right now. The first drilling grade doesn't seem to be here in the way that you might have hoped, I presume. Correct me if I'm wrong. But so, yeah, what's the word at Carmenes? Is the target still, is it killed? Is there more potential there? How do you see it?
Yeah, so you look, Carmenes was again a sort of an opportunistic mineral rights opportunity. We liked it. We were attracted to it a few years ago because there were some old 100-year-old plus mines that produced some copper and cobalt concentrates, very high-grade pipe-like breccia bodies. So that was pretty interesting. I mean, they produced a copper concentrate and a cobalt concentrate, both of which had some nickel. There was a smelter built. It was important enough they had a smelter nearby. So that time, there were two main mines, one called Providencia and the other one called Profunda. Profunda was the bigger of the two. So those were our initial targets of interest. We thought these, bit like VMS deposits, breccia pipes can occur in clusters. And this was sort of a forgotten area of Spain. It's in northern Leon, which is, again, another mining area. There are big open pit coal mines to within 10 kilometres of where we're operating. So, this is the towns around there are mining towns, etc. So, look, it was the copper, nickel, cobalt, and it was unusually high grade, and the prospect of making additional discoveries with good, systematic exploration that was of interest to us. So we managed to acquire the property from a state-owned company called Siem Calcer. Mm-hmm. No royalties or anything like that. We own it 100%. There's no other liabilities, no other payments to be made, etc. And we began the first systematic exploration in that property end of last year and continued into the early part of this year. So, as I say, our initial focus was more on the copper, nickel, cobalt. So we planned we did an initial soil geochemistry, sort of wide-space soil geochemistry program over just about 5% of the area, but importantly covering the area where those two mines were located. And that was just using a portable XRF. So you can get faster turnaround in terms of results and then guide your exploration. Using that information, we said, let's focus initially our detailed follow-up on the Providencia target. And this was a mine that only went to about 110 metres depth or something like that. It seemed to be something that had started mining but never finished. But again, looked to have produced some pretty high grades. There was some early underground sampling by Siem Calcer, the company we bought it off, which again was providing some confirmation that these were multi-percent copper, cobalt, nickel mines. So pretty attractive. So we did a detailed soil geochemistry program over that and assayed for gold, and we mapped the area in detail. And during that, we also collected some samples of outcrop, and some of those early outcrop samples came back with up to 10 grams gold. Now, there was some mention of gold in the old mines, but it was never mined. They never mined for gold. So there was a PhD study which recognised there was some gold grains in some chalcopyrite, etc. But essentially, it was gold was not really that known. So with our exploration work, we identified a gold anomaly to the east of the old mine workings and upslope. And we're talking of the 200 sample program, 49 samples averaged over 5 grams gold in soils, away from the effects of the old mine workings. So that was pretty interesting, adding to the outcrop samples of over 10 grams as well. So we had soil samples, a number of samples running over 20 grams gold in the soil. So pretty extraordinary. But look, our initial plan was to put 2 or 3 drill holes into the in and around the old mine workings to look for extensions of the copper nickel cobalt mineralisation, get a good look at it. So the first hole was drilled to the south, down the southern margin of the breccia pipe, and it hit 46 metres at 1.1 grams gold. We didn't hit the sulphide mineralisation that was being targeted by the old mines. This seemed to be in a sort of hematite-rich breccia, and that was a pleasant surprise. But that was certainly not known previously, and a completely new gold discovery. There was 4 metres of over 6 grams, and there was 21 metres of 1.5 grams within that 46 metres, and that was from near surface. So that was a pretty good result. Then we also drilled sort of through the breccia pipe. We hit some gold outside of the main sulphide, outside the old mines. We did hit some of the sulphide-rich breccia with the copper nickel cobalt. We had 4 metres running several percent of copper nickel and cobalt, and then we drilled another. Importantly, that hole intersected some very wide zones of breccia. I mean, we're talking 50 to 100 plus metres of breccia, anomalous in gold pretty much over the entire length. I mean, one of them was over 110 metres of quarter gram gold. Another one was 56 metres of nearly 0.4 grams gold, etc. So that's telling us that we've got a pretty decent sized breccia system on our hands here. And it's not just the copper, nickel, cobalt, but it's actually, that's the more interesting target could be, and from a volume perspective, is the gold. Now, those first 3 holes were in and around the old mine working. They were not testing this area where we defined this strong gold anomaly in the soil geochemistry. So the next 3 holes that we're drilling right now are designed to test that zone. So we finished 2 of the 3 holes in this new gold zone off to the east of the mine workings, and we have 1 more to finish, and that hole's drilling right now. So we haven't got any results to report yet, but fingers crossed. We're going to hit some gold mineralisation. I'm 100% sure. So just how much and over what sort of thickness.
What do you do after that? And is that going to depend on those assay results and what you read from them? Like, is there a chance or is there a world where you say, Carmenes, we're going to, leave it for now, we'll put it in the back burner, or do you definitely want to go back to it during the next drill season?
I think given what we've seen so far, I should have mentioned, we also, during the mapping exercise, found a couple of old exploration tunnels, and we did a continuous twin saw cut channel sample in the wall of one of those galleries, and we got 37 metres of 3 grams gold. So that's like a drill hole. So one of these holes that we're drilling at the moment is designed to sort of go underneath that. So that's why I say this is looking pretty significant, and over those sort of thicknesses, those grades, that's starting to look pretty attractive. So yeah, unless we get some dust, the next 3 holes are dusters. I'm almost certain we're going to be back there drilling some more holes. The other thing is we've gone back into the old underground mine workings and we've been at one access level, sort of high up, and we've done a continuous twin saw cut channel sample all the way around all the walls of that mine working. One, to understand the dimensions of it, but also to understand the geology and the grade distribution, etc. And that's been, the next news release I think we'll probably have, we'll report those results from that work. But it's very clear that this high-grade copper nickel cobalt mineralisation continues. It's in the walls, still open. The dimensions at that level were of the breccia, the sulfide-rich breccia, were about 35 metres by 17 metres. So, if you're looking at multi-percent material, that gives you an idea there's something. The copper nickel cobalt is still a pretty attractive target in its own right, but it's the gold potential around it that was not known before. That is the new discovery, and we really don't know the geometry of that at this point.
When do you want to have some assays out?
Yeah, so we'll finish this next hole maybe early next week, this last hole. And there's already samples being sent to the laboratory. So the results from the samples from that last hole, it usually takes maybe a week to finish the cutting, maybe a bit less than that, and get it off to the laboratory. So, usually add about 3 weeks on top of that after you finish the hole.
Oh, okay.
We may have some results to report before that. We'll see.
Yeah. So what's starting September, more or less, it's going to be a news-heavy period for a couple of months, really, maybe.
Yeah, that's the idea. Yeah.
Yeah. What do you think of being through most of these things? Again, I would love to do a geo deep dive and sit and talk specifically about the rocks for maybe another hour and a half or 2 hours. But what are you budgeting for G&A in the meantime? I mentioned 156,000. What you averaged out over the last reported quarter, is that representative? Is that where you want to keep it?
Yeah, our group G&A is about 150,000. So if you add Spain fixed costs, it's another 200,000 Canadian. So, yeah,
right. Okay.
350,000 roughly Canadian per month is about it. That's fixed costs.
Okay. That includes marketing and everything else then?
Just everything, yeah. So okay. G&A is on its own is about 150,000, like you said. That's about right.
Well, are you planning anything different for marketing as you're going, into that MRE and maybe, attracting more people to hear the tree when it falls in the woods or like, yeah?
Yeah, so we'll do some road shows. I'm planning another one in Europe, probably in October. That's been, Europe's been, good for us the last couple of years. We'd never done any marketing in Europe until a couple of years ago. And we thought, well, we've got a project in Europe. It's good to diversify our investor base in any case, and get away from the Canadian tax loss selling issues, etc. And I think it was that was a good decision. And the last couple of financings have been mostly investors in Europe. So so we'll do more of that. We've got a couple of other conferences we're doing. We've just got another analyst covering us now as well. So we're not spending huge amounts on marketing, etc. But you have to do some. But we're very selective about what we use in those ones which we think going to give us the best results.
So you're not planning on increasing marketing spend going into the MRE, are you?
Yes, I think that will be another catalyst potentially. But it depends on the timing when the resource comes out. But we're not waiting for that to get on the road, if you like.
Right.
So I think we've got a lot of results to come to that. I think are going to be very newsworthy.
Being a good introduction here, Tim. I think I've been through most of my questions. Again, be good to do a geo deep dive on the back of this. But what is nothing's really ever perfect? What keeps you up at night?
Yeah. I think having been in and around the exploration business for 40 years, it's my wife says, I don't know how you do it. You seem to be waiting for good results every time, and more often than not, you don't get the results you want. But so I think it doesn't keep me up so much. It's more there's always a healthy anticipation for good results, and that's I think if anything, that's the thing that keeps me driven and keeps the game exciting. So
What's the most fair criticism that you've heard of Pan Global, either online or when you talk
Yeah,
to investors?
good question. Yeah. So, look, I've had some feedback, well, about the pace of exploration the last couple of years. They wish we'd gone a bit harder, but look, that's been a very tough sort of situation for us, and I guess starting 2.5 years ago, and it wasn't just us. I think all of the junior world started to see this sort of decline, tougher market, share price falling, and it was indiscriminate. It wasn't sort of just us. It wasn't results related or anything like that. It was just caught up in this general trend. And as much as we tried to buck that trend, we were not making success. So, look, we had at the beginning of that sort of 2.5 years ago, we had 4 drill rigs turning. We turned it up. We were going hard. We were putting out good results, but we weren't seeing the return on our share price. It didn't matter what we were putting out. You'd get a bump, but then they could reverse and keep going. So, look, so we said, okay, in that environment, it doesn't make sense to just keep, burning money at a great rate of knots if you're not seeing the reaction. So let's take a more prudent, more conservative approach to spend and see if we can ride through this and then step it up again when the market allows. And look, the last financing we did, we went out for 2 million. We came back with 7. That gave us the money to step it up again. So we felt that perhaps the market was starting to turn, the end of last year, beginning of this year. And I think share price we've seen, albeit off a low base, we're down at 8 cents, 9 cents at the beginning of the year. And we're now, up around 15 or so cents. So we've seen some improvement in the market. But with that extra money, we've had 2 or 3 drill rigs drilling for a good part of this year. And we have this multi-target drill program. So, that's been one of the concerns, one of the criticisms that we haven't gone hard enough, the pace of things. But look, it's a tough call. Do you go through the money if you're not getting reaction? Do you keep adding more dilution, or do you try and ride the market out of it? And maybe we got it right, maybe we got it wrong. I don't know. But look, along the way, we have made some more success, and I think we've created a lot of opportunities for wealth for investors with the portfolio we've got in our hands.
I'm sure there's multiple answers to this last question that I want to ask you here, but what am I forgetting to ask you? And this is also for people listening and watching this. If I'm forgetting something, please let me know and I'll ask it in our next conversation. But Tim, what do you think? What am I forgetting to ask you?
We didn't really talk about the strength of our board of directors, but I certainly, suggest any of your listeners have a look at the CVs. We have a very strong board as well, which I think covers all the bases in many respects. We've got a lot of big company background, Anglo-American with Paddy Downey. He's a mine builder. He's very well known in the industry. Patrick Evans, Placidome as background as well, but he also he's been involved with a number of exploration companies, junior exploration companies that have gone to successful takeover situations. Again, very well known in the industry, well regarded. Bob Parsons, 35 years in the natural resources sector for PwC. I think he's still on the board of the PDAC as well. So, this is the caliber of the people. Corinne Smith is in Newmont, metal marketing, etc. So we've got a very strong board. Brian Kersner as well, not a mining guy as such, but has been an investor in juniors for many years. But he brings a lot of sort of problem-solving business sense to the board and gives us some good balance. But so I think we have a very strong board behind us that I think helps with the overall decision making and the strategic thinking behind the company.
what are they getting paid? The board members. I mean, having heavy hitters on the board is great, but they would sometimes require a paycheck as well. Or do they get a cash compensation, or is it mostly options? How do they get compensated?
Yeah, there is a cash component. I think it's. Oh, I'm trying to think what the number is off the top of my head, but it's it's not a big number. Put it this way, maybe it's 10 or 12,000 a year.
Oh, okay. I thought it would be 10 or 12,000 a month. So that's why I'm asking. But
and then there's options, things like that. So
yeah, good. Well, Tim, I'll let you do your thing. I've tried to be as annoying as possible to you today, so I think you've had enough of me, or at least I'm assuming. But thank you so much for doing this, and hopefully speak again soon.
yeah, thank you.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know, and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias, and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company-specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing, and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. So unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by resource talks, or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release resource talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."